today I am HeberLuza, and now we were going to discuss cash budget. But before we proceed, let us identify what is budget.
Budget is an estimation of revenue and expenses over a specified future period of time and is usually compiled and reevaluated on a periodic
Budget
basis.
can be made for a person, a family, a group of people, a business, a government, a country, a multinational organization, or just about anything else that makes and spends money. At companies and organizations, a budget is an internal tool by management and is often not required for reporting by external parties. Oh, there you are, guys. And now we also have the different kinds or different types of budget. And we have sales, production, capital, cash, marketing, project, revenue, and expenditures. And in this video, I am going to discuss only a cash budget.
Cash budget is a review or projection of cash inflows and outflows. It can be used as a tool for analyzing the revenues and costs of a company or
Cash budget
individual.
is a planning tool used by the companies and individuals to evaluate projected cash flows during the specified period of time, monthly, quarterly, or annually. For example, if a company's cash budget forecasts itemized inflows or income of 1 million pesos and itemized cash payments or expenses of 800,000, management can feel fairly certain that it will have enough cash to pay all of its bills. And now let us identify why our cash budget prepared. A large number of transactions that take place in a firm generate of a flow of cash. The flow of cash may be into or out of
Cash
the firm.
budget is prepared to show the cash inflows and outflows expected in a budget period and net effect to these flows on cash balances. Cash budget enables management to obtain a preview of the cash position of the firm. Objectives of preparing cash budget is to enable the management to meet its cash obligation as and when they fall due and to keep idle cash to a minimum level.
If at any time cash is much excess of requirements, this means the firm is holding a sterile asset. Short of cash may at times prove suicidal. It should also be clearly understood that the liquidity provided by the cash holding is at the cost of profits which would otherwise have been earned by investing cash elsewhere. It is also important to know the utility of cash budget, and those are: number one, it indicates the effect on the cash position of seasonal requirements, large inventories, unusual receipts, and slowness in collecting bills receivables. Number two, it indicates cash requirements for a plant or equipment expansion program. Number three, it points to the need of additional funds for external sources such as bank loans, issue of securities. Number four, it indicates the availability of cash for taking advantage of discounts offered. Number five, it helps in planning redemption of preference shares or redeemable debentures, payments of pension, or etc. Number six, it shows the availability of excess funds for short or long-term investment. The next is the methods of preparing cash budget. A cash budget can be prepared under any of the following methods like receipts and payment methods, adjusted profits and loss methods, balance sheets methods. Receipts and payments method. This is the most simple and popular method of preparing cash budget. This method is useful for preparing short-term cash budget. Under this method, all expected cash receipts and payments of budget period are considered for preparing cash budget. Accruals and adjustments are ignored while preparing the cash budget by receipts and payments methods. The cash budget starts with the opening cash in hand and at bank. All expected cash receipts from various sources such as cash sales, cash collected from debtors, dividends, interest on bonds, proceeds from sales of assets, bank loans, etc. are added to the opening balance of cash items of expected cash payments such as cash purchases, payments of creditors, payment of expenses, dividends, tax, and purchase of fixed assets, and etc., whether in capital or revenue accounts are deducted. Adjusted profit and loss method. This method is usually followed in preparing long-term cash budgets and is provide lesser details than the receipts and payment method. Under this method, profit and loss account is used as a basis for making the cash forecast. This method is based on the analogy that the profit made during the period should increase the cash balance. While preparing the usual profit and loss account, many items which do not involve cash outlay such as depreciation, transfer to reserves, fictitious assets written off, and of goodwill written off, and etc. are subtracted from gross profit, but the amount subtracted from profit remains in the business. To arrive at the cash balance available at the closing date, these items are added back to the net profit. A specimen of cash budget based on this method is given. Balance sheet method. This method is also useful for preparing long-term cash budgets. Under this method, a budgeted balance sheet is prepared for a certain future period showing all liabilities and assets except from cash and bank balances. The cash or bank balance is arrived at as the balancing figure of the two sides of the balance sheet. If the liability side is more than the asset side, the excess is taken as closing cash on hand or at bank. And there you have it, guys. I hope that you learned something from my discussion about cash budget. Thank you. Goodbye.